Hello and welcome back to Chart Pattern Trading Masterclass by Wealthy Education. This is the beginning of Module 2, the most bullish chart patterns. In this video, we'll be talking about a double bottom pattern or mastering it. One of the simplest patterns out there, one of my favorites, mainly because it's so obvious. A double bottom is just what it sounds like. Market falls, bounces, it's formed one bottom, it falls, it bounces again, it's formed a double bottom. So sometimes you'll hear it called the W pattern. It's kind of interchangeable, and you can see why. The idea is once you break above the middle part of the W, you go long, and now you can put your stop loss on the other side of it. You should get at least the height of the pattern. Some people will put their stop loss in the middle and aim for the height of the pattern, thereby making sure it's at least a 2-to-1 ratio. But realistically, a lot of times these double bottoms kick off a much bigger move than just the height of it as well. So there are a couple different ways to look at it. So you can see double bottom right here in the dollar Swiss, and we broke quite a bit of movement to the upside, right about the same height. We pulled back, formed another double bottom, and then really took off. So you can see the power of these patterns, mainly if for no other reason, everybody else sees them too. And that's a good thing. You want the market with you. 97.5, an area of obvious interest as we have moved along. So certainly makes a lot of sense. You could probably make an argument for a bit of a trend line there as well. If not on that one probably. So you see where I'm going with that. Let's go ahead and take a look at a stock. Let's do Hindalco. Here we go. So here's a nice double bottom. So the question is, why would you get involved in that? Well, there's nothing on the immediate chart that would tell you that. But when you look at the past, you can see that there was a significant amount of support there. This was one of many that we had tested. So a lot of times what people will do if they want to go long a stock, they will mark out levels that have been important multiple times in the past, and then they'll just wait for some type of confirmation. And you can see we didn't really get it there, sliced right through that one. And here we formed a double bottom. So, you can look at it through that prism. You can also, I'm going to take a guess here, but I suspect you could also say that the 61.8% Fibonacci is right there as well. Now, did it get its double bottom height? Well, of course. I mean, it got quite a bit more than that. Now, it took time. Again, these things don't necessarily move on your schedule, but it's been a pretty significant move higher. Let's take a look at crypto. Now, Solana, you can see, is in the midst of trying to form a double bottom. But here's the thing. It's not a double bottom until it breaks the middle of the W pattern. And you can see it's already starting to look a little bit limp. So by adhering to that, you will have saved yourself a lot of trouble. Plus, you have to look at it this way. Let's just say that this market went straight up, whatever reason. Everybody in that area is now losing money and they need to buy back their shorts. So that's what you're looking for. Basically, you're looking for traders that are trapped. This was a double bottom, but it never kicked off. So these are false signals, or, not fired off trading signals. And those are important to understand what they look like as well. Here's one that did right here at 38. You can see, it did pull back a little bit, but then eventually took off, pulled back again, and then took off. So you can see just how important these can be. And, some of them are going to mean more than others. So let's take a look at dollar yen. Clear all my drawings. So there's a double bottom there. Now, they're not really close to each other, so it's a bit of a stretch. But here's one. Bounce, bounce. Right off the 50-day EMA. And more importantly, it suggests that we're going higher and we're in an uptrend. So that really, you're not even trying to find the bottom here. You're just trying to find the bottom of the pullback. And those are two distinctly different things that are worth differentiating. And on the daily chart, you can see it looks a little cleaner there. I guess that was the 4-hour chart, but the whole point is you're looking for where the market's not going to go. A lot of times where the market doesn't want to go, that's a huge signal in and of itself. So in the next video, we'll take a look at a pattern called the cup and handle pattern.